Good morning everyone. In today's video we will talk about capital market. So capital market is the market where investment instruments like bond, equity and mortgage are traded. It is a market which deals in long-term loans. It supplies industries with fixed and working capital and finances medium-term and long-term borrowing of center, state and local government. Major function of this market is to make investment from stockholders who has excess funds to the one who are running a scarcity. The capital market provides both long-term and overnight funds. Capital market is an instrument for arrangement. Capital market is an instrumental arrangement for borrowing medium and long-term funds which provide facilities for marketing and trading of security. So it constitutes all long-term borrowing from bank and financial institutions, borrowing from foreign markets, raising of capital by issue of various securities such as shares, debenture, bond, etc. Financial instruments that are traded in capital market. There are various type of financial instruments that are traded in capital market like equity instrument, credit market instruments, finance instruments, foreign exchange instruments, hybrid instruments, derivative instruments. If we talk about various types, there are basically two types of capital market which include the primary market and secondary market. Primary market is that market in which shares, debentures and other securities are sold for the first time to collect long-term capital. This market is concerned with new issues. Therefore, primary market is also known as new issue market. In this market, basically the flow of fund is from saver to borrower. Therefore, it helps directly in capital formation of a country. The money collected from this market is normally used by the companies to improve the plant, machinery, building, etc. for expanding business and for establishing new business unit, etc. So basically, it is concerned with new issues. If we talk about the features of primary market, the first characteristics of primary market is that it is related with new issues. Whenever a company issues new shares or debenture, it is known as initial public offer. Primary market is not the name of any particular place, but it is the activity of bringing in new issues. It has several modes of floating capital. Method of raising capital in primary market are: first is public issue. In this technique, the company issues a prospectus and invites the general public to purchase shares and debentures. Second is offer for sale. Under this process, initially the new securities are offered to an intermediary who can be a broker, or generally it is a firms of stock brokers at a fixed price. They further resell the same to the general public. The benefit of this method is that the issuing company feels free from tedious work of making a public issue. Then we have private placement. This process entitles that the company sells security to the institutional investors or broker instead of selling them to general public. They in return sell the security to selected clients at a higher price. This method is considered as the most cheaper method to raise finance as compared to public offer. Fourth, we have right issue. This technique is used by companies who have already issued their shares. When the existing companies issues new shares, first of all it invites its existing shareholders. This issue is called right issue. In this technique, the shareholders has the right either to accept the offer for himself or assign a part or all of his right in favor of another person. Then is electric initial public issue. Under Under this process, the company issued their securities through the electronic medium. The company issuing securities through this medium enters into a contract with stock exchange. So the fourth feature of primary market is that it comes before secondary market. The transactions are made first in primary market. The turn of secondary market comes later. If we talk about the benefits of primary market, so the first has to be the manipulation of price is smaller, so the investment in primary market is safer. No need to time the market. The investor get the share at the same price. It is secure because of primary research data. Data is collected directly by the organization that developed the research, that deployed the research. The company receives the money and issue new security certificates to the investors. Now let's talk about secondary market. The secondary market is that market in which the buying and selling of formally issued securities is done. The transaction of secondary market are usually done through medium of stock exchange. The main aim of secondary market is to create liquidity in securities. Features of secondary market is it create liquidity. It comes after primary market. It has a particular place and it boosts new investment. If we talk about the benefits of secondary market, then the investor can recover their investment to a certain extent provided their economic status undergo a change. In such case, the investor may refrain from making long-term investment. Investor can get large interest by invest for a long period of time. So that was for the secondary market. If we talk about the significance of capital market, if we talk about the importance of capital market, then the capital market has significant role in mobilizing saving and contribute into productive investment for development of commerce and industry. The capital market helps in capital formation and economic development of the country. As the fund flows into capital market from individual and financial mediators which are absorbed by business, industries and government, it allows the movement of stream of capital to be used more effectively and more profitability to boost the national income. The capital market also provides incentives to savers in form of interest or dividend and transfer funds to investors. Thus, it leads to capital formation. Actually, the capital market provides a market tool for those who have saving and to those who need funds for productive investment. An organized and matured capital market comprising expert banking and non-banking intermediaries brings strength in the value of stock and securities. It does so by providing capital to the needy at reasonable interest rate and helps in reducing speculative activities. The capital market also boosts economic development. The various institutions which operates in the capital market give quantities and qualitative direction to the flow of funds and bring rational allocation of resources. They do so by changing financial assets into productive physical assets. This leads to development of business and industry through the private and public sector, thereby bringing economic progress. In an underdeveloped country where the capital is limited, the absence of developed capital market is greater interference to the capital formation and economic development. Even though people are poor, yet they do not have any inducement to save. Others who save, they invest in their saving in wasteful or unproductive channels such as gold, jewelry, real estate, etc. Such companies can encourage people to save more by establishing banking and non-financial institutions for existence of a developed capital market. Such market can go a long way in providing a link between savers and investors, thereby leading a capital formation and economic progress. So the capital market in India is a market for security where companies and government can increase long-term funds. So that's all for today. Thank you. Thank you for watching.